Welcome to this video update. We're on the 23rd of August. We're on Sunday. We're just going to be looking at a trading opportunity in USD CHF. We're going to go over to the chart in a moment. Now, in terms of USD CHF, it's been in a strong downtrend. Technically, it looks like we're forming a bottom and we're getting ready to break out to the upside and have a major rally. Now, behind the charts, we know the speculators are heavily short the USD. And commercials, the smart money, are heavily long. The divergence is really big and points to a major rally. Now, we know the positioning of speculators and commercials from our favourite smart money indicator in Forex, which is the COT, the Commitment of Traders Report, a completely free tool from the CFTC. And it will very often warn you of major reversals. And this setup looks really good. Now, I'm going to explain how we use the indicator in this video in brief, but if you want more info on the indicator, just search our channel for the video COT Net Trader Positions Indicator. Right, what we are going to do is we're going to go and take a look at the trade setup, but just before we do so, please do keep in mind it is my view as of right now. It can of course change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, including this one, you can click on the link beneath this video. You'll get live access to our member set. You can also follow us on Facebook and join our Facebook group of traders. Right, before I draw my levels of entry, stop and target, let's just take a quick look at the COT Net Traders positions. Right, so we're on the COT Net Traders positions. For anyone new to them, it's always the foreign currency first. So it's Swiss franc v USD here. We obviously trade USD CHF, so I'll reverse the chart around in a moment. But yeah, what we're really interested in here, of course, is what the dealers, the commercial hedgers, the smart money are doing against speculators. When you're trading the COT, don't trade every twist and turn between the two groups. You want big divergences, and we've got a really big divergence at the moment. You can see it here. Speculators, their biggest long position since 2011, and the commercials are heavily short against them. It's a nice big rise up in the Swiss franc, but you had a nice big rise up here on the left. You can see a divergence. It's not as big as the one we've got now, but the commercials were heavily short, specs heavily long. We fell from 130 down below 110, so that's a 2,000 pip move. I'm not looking for that size of move right now, but I'm looking for a sizable move, which we'll see on the chart of USD CHF. We know the commercials heavily long, specs heavily short. We think the specs will exit on stop and the dollar will have a major rally. So right, let's go over and take a look at the technicals. Right, USD CHF, got the chart the right way around. Obviously a big fall in the dollar, but we're having a little bit of a bounce. I think we're getting ready to move strongly to the upside. I'll draw my levels of entry, stop and target in a moment. But just first of all, in terms of the fundamentals and sentiment, why are the commercials so bullish of the USD and speculators so bearish? I've written out some points, so I'm just quickly going to go through them. Swiss National Bank continues to view the Swiss franc as highly valued. That's their wording. And according to the OECD, the CHF is one of the most overvalued major currencies in the world. Okay, and the SNB do not want Swiss franc strength. They have negative rates. They have a large balance sheet. They print money, and they will intervene to cap CHF strength. Okay, and you can see that over the last week, basically, they're actively trying to keep the Swiss franc from strengthening across the board. Okay, now with good reason actually, because in terms of the economic activity in Switzerland, it's only modestly bounced from all-time lows, and the economy is heavily tied to the EU and Germany. And speculators have had this general view that the EU economy is going to do well going forward. I think the PMI data on Friday just shows that it isn't. And I did a full video on the euro yesterday, which is the one before this one, which you can go and check out the reasons why we don't think the EU or Germany are going to do well going forward. We're actually very bearish of the euro for a turn as well, which has a good COT divergence on it as well, the pair. USD has been generally weak. July, worst month in 10 years, on the speculators' bearish view of the economy, thinking the economy in America is going to do worse than other major economies. In the Euro video yesterday, I pointed out how I do not think that's true, and also the data does support the view that it will do well going forward. Also, speculators in recent months had a bearish view of the Fed. They thought the Fed was going to move to yield curve control, which would be heavily bearish for the USD. We didn't think they would. They didn't. And the USD did bounce here on this blue. Right, let's do the technicals. When we come down and we break this green line here, the 20-day moving average, you basically see that rallies are held by it, okay? There again. We did get through it there, came back, and now just sitting below it. It's this blue here I like. It's a reversal candle in my view, because when we come down here, we hit a new daily low and we try and get through 90, which is a big level, okay? And we can't do it. Okay, you make the new low, you settle off it. Next day, you try and take out the low, but can't, and we get a big blue. So that there is support. And when we bounce here, we bounce back through the previous level of support, which is, of course, resistance. So we come up, break above, sorry, 1 minute, there we go. We break above these tails here and that body there. So we come through and we sit, or we come back, basically bounce from the level. We're just poised just below the 20-day moving average. So if I do that, just want really a breakout from the triangle, and then we should be off to the upside. You can wait for those two bodies to go through there. Now, how far could we go? With the speculators so short, okay, I think the divergence points to a big move up towards the 96 level, which is about a 450 pip rally, okay? And yeah, if we break out, I think the speculators will exit and will just gravitate up. Now, when you come in to the trade, if you want to do it, in my view, don't put your stop just above the 90 level, put it below, okay, away from the round number. It's a massive level of support, or big level of support on the longer term chart. So just back behind the 90 level. If we follow through, you could bring your stop up behind this level and then this level. You manage the trade as it goes. But in terms of a risk to reward, you've got 4 to 1. And yeah, if you break out, you are looking for follow through, because the speculators will just come out on stop and hopefully get a nice big rally to the upside. It's a good risk to reward trade in our view. And in terms of the COT net traders positions, if you're new to the indicator, go and research it, because it will very often get you some really good risk to reward trades. Okay, and when you use the COT, you see the technicals in a completely different light, and you can keep your technical analysis very, very simple, as I've done here. Right, we will see how this trade opportunity goes. Next week, it will be in the guest pair section of the website, so you can track it on a daily basis, how we view it. Okay, thanks for watching me, as per usual. Take care. Have a good day.